Good morning, everyone, and Happy New Year. So in today's episode, I'm going to talk and try to recap for you what happened in our crazy economy last year and the markets, right? So if you joined our webinar this past month, we went a lot more in depth. But what I'm going to try, or attempt to try to do anyways, is to highlight a few of those things. Now, as you've heard me say on many of the episode, or even in the media, obviously, there were four big headwinds, not only for our US economy last year, but our world economy. Inflation, spiking interest rates, war in Ukraine, and China's lockdown. A lot of things hit at one time. Now, these headlines wore down a lot of investors last year, right? Many of you. So let's recap what happened. In this chart, you can see at the beginning of 2022, about a year ago, you had inflation concerns. It was only this time last year where the markets started dropping a little bit. The Fed came out in January last year saying, hey, we're going to start raising rates. Inflation is not transitory. After that little drop in the markets had a nice upturn. But then we were hit with Russia invading Ukraine. Okay? A few months go on as the markets dropped, and in early June, roughly mid-June, you started seeing the markets bottom, right? They dropped about 25% from their highs, but why they dropped and then those next 6 weeks went up was because there was hopes inflation was easing. You had oil dropping significantly, but unfortunately other parts of inflation remained much higher than the markets expected, and the Fed then have to continue raise rates more than what we were initially predicting. So after that, the markets dropped a little bit. But then the last few months of the year again here, we saw another uptick. And why that happened was inflation numbers started peaking. And every month started coming down month over month, right? So we started at about 9.5 the peak. Today we're roughly at about 6.5%. As a whole, the S&P ended up down 18% for the year, as you can see from this graph. But that was only part of the markets. As you can see here, growth and tech stocks were down roughly 29% for the year. Now these stocks, or a couple of them, got the headlines. Tesla was down 65% last year. Amazon was down 50%. That's why we diversify you, right? Now we understand there's a lot of headlines to digest, right? And again, a lot happened last year to try to navigate and guide during these times when the media is trying to influence us to do things. This year, though, is off to a good start. The markets are up roughly about 4%. And why that is because inflation numbers to continue to come down and China is starting to open up. So this is good news, not only for our economy, but the markets, because if we can take one or two of those four headwinds off the table, it would help our economy from going into a recession. So the next few months, the markets are focused on when the Fed will pause raising rates. How soft or how hard the landing will be from this, nobody quite knows yet. They're all trying to guess. And we understand the word recession is coming up more and more in the media. And our goal the next few months is to talk and keep you informed on what the markets are thinking, how that is affecting our economy, and more importantly, your retirement. So unfortunately, right now, there's just way too many unknowns to try to forecast or predict actually what will happen. So I hope this was helpful, but our goal this year is really to be more in front more than any and keep you updated because there's a lot going on that can influence us. And so we look forward to seeing you next month on Oakcrest Insight.